Good morning, Vanshika. Good morning. So today we commence a new chapter that is Ind AS 108 that deals with operating segments. It is a disclosure standard. It's not related to any major computation as such, but from the perspective of your financial reporting, it's one of the key standards. Okay. In your examinations, this has come a couple of times, and basis that I suppose whenever these questions come from this chapter, it's fairly easy to score the marks. So I will place it at that pedestal where you should not make a mistake when it comes to this chapter in the examinations. It is a medium level standard in terms of priorities. It's not at the very top level like consolidation or financial instruments. At the same time, we cannot discount it because it is a highly scoring chapter. So therefore, from that perspective, there are some standards where you just brush up and then you are ready to do the questions on the chapters. Okay, so we'll start with Ind AS 108 operating segments. Now, who all are there? Good morning, Shailesh. Good morning, Muhammad. Good morning, Yedu. Good morning. Good morning. Okay, so let us commence our discussion on Ind AS 108. Okay. How many of you have seen annual reports of companies? Have you seen annual reports of companies? Any of the companies? Good morning, Shruti. Yes. Have you seen? Good morning, Viraj. Good morning. So, have you guys seen annual reports of companies? Yes. So, in that, have you seen something known as segment reporting or operating segments? Any section such as this? Yes. Did we have a corresponding standard under the AS regime? Did we have a corresponding standard under accounting standards regime? Do you recollect studying anything? Yes, guys, Vanshika, Muhammad, Yadu, Viraj, do you recollect studying anything under the accounting standard regime relating to segments? Yes. Okay. Which accounting standard? We had an earlier accounting standard known as AS 17 that dealt with segment reporting. Okay, so this was the standard that we had dealt with previously. Okay, so now uh, we have Ind AS 108 that deals with operating segments. Now, why is this segment very crucial for our disclosure purposes? What am I achieving out of this? So essentially what happens is you consider any company, okay? You take a company like Tata, you take a group like Reliance, you take a group like Unilever, you take a group like Larsen and Toubro, right? So let us consider a company like, for example, Mahindra, okay? This Mahindra company is having its legs into automobiles. You would be aware of it. Yes, where it has its own vehicles and also it has partnered with Renault and also it has partnered with Renault. Apart from that, Mahindra is also into real estate. Yes, Mahindra is also into real estate. So you are having properties, commercial complexes, etc., which Mahindra constructs. Apart from that, you also have its presence in the IT industry, where you have Mahindra Tech or Mahindra Infotech, which is into the information technology segment. And then you are also having Mahindra operating in the aerospace and defense segment, where you have Mahindra Defense Systems Limited, MDSN. Yes, and it is having its feet into a lot of other businesses. But for us, these four are adequate to discuss. Okay. So when you look at Mahindra's balance sheet, see, these may be individual companies Mahindra Automobiles may be one company, real estate may be another, IT would be another, MDSL would be another. Okay, there would be different companies, but at the end, what Mahindra does is it consolidates all of them into one single financial statement, which is known as consolidated financial statements. Okay, which is known as consolidated financial statements. You have the same concept for Reliance also, where you have Geo Infocom, News 18. You also have, Reliance Retail, Reliance Digital, Reliance Trends, Reliance Smart, God knows whatever Reliances are there. Yes, all of these get combined into one single set of financial statements known as consolidated financial statements. So as of now, my focus is forget standalone, forget consolidated. Think about Mahindra having its operations in four different businesses: automobiles, real estate, IT, and defense, aerospace and defense. Now, the question is, when you look at your profit and loss account, what do you see? Sir, in my profit and loss account, I will have operating revenues or revenue from operations. So this is my operate. Forget the format right now. I'm just explaining the concept. So I'm looking at my operating revenues. I'm looking at any other income that is there. That gives me the total income. Then I look at expenses, cost of goods sold, employee benefits, then depreciation, then other expenses, then finance cost. All these put together will give me my total expenses, and that gives you your net profit. Okay. Then you have the tax adjustment, etc., and you come to the final profit available for the shareholders. So that is your profit and loss account, which is prepared. Now, this profit and loss gets circulated to investors, creditors, analysts, basically everybody interested, since it's a public limited company, a listed entity. The balance sheet profit and loss is easily available for viewing, and people will start viewing it. Now, the manner in which these things are viewed is different. Maybe you and I as shareholders will probably view only for the limited purposes of uh, dividend declaration, profitability, थोड़ा ऊपर से देख के company is financially stable, it is good to continue the investment. That is what we as shareholders will be looking at. If we go one step further, maybe as professionals, you and I would be having a further interest to see how things are presented, how a particular treatment is done in the financial statements, any particular important disclosure has come, or any post balance sheet event that has happened which I need to be aware about. So those are the kind of things which you and I can look after and understand. But when you look at analysts, these are the guys who are predicting the future of the company. So when they predict the future, they will have to predict the revenues, the costs, the profits, what is going to be generated by Mahindra. And that is their job, right? They predict the future, and then basis that they tell you that is it worth to buy, is it worth to sell, or is it worth to hold? So that is what is the decisions they communicate in through their analysis. Now, for the analyst to look and predict the company's future, do you think a simple profit and loss would be adequate? You will say, हाँ ठीक है, उसमें क्या है? We have the previous period trends, and basis that we can estimate how the business is growing, so we can have a pattern. But my friend, the operating profit and loss, the operating revenues, income, expenses, etc., are all coming from different sources. They are all coming from different businesses. For example, the automobile industry may give you a 15% year-on-year growth, whereas the real estate is giving a close to 20% year-on-year growth. The information technology sector is currently experiencing a lag, and therefore we are seeing only an 8% year-on-year growth. The defense and aerospace sector, Mahindra is still relatively new in that, and therefore, I'm just making the story up, okay? And therefore, probably we can expect only a 4%. All these numbers put together come in your profit and loss account. But how are you going to predict if this split is not given? It's very difficult for us to predict because the revenue indicators for each items, each business segment is different. The revenue indicators are different. The manner in which the cost is driven, that is different. For example, if you look at real estate business, the costs that are driving the segment is basically on a project-wise basis, right? So each project will define your what you can say the result of the real estate division. And not only that, the revenue recognition principle itself is different in real estate. You cannot have an invoice based recognition where you raise the demand note and recognize the revenue. It typically goes on a percentage of completion basis, something what we saw in Ind AS 115. On the other hand, you are having the IT sector where probably you are having project-based revenues as well, where you are building, say, a data center for Amazon, or you are constructing, or you are into a software development for one of the customers that is in the manufacturing industry, or you are providing routine services in respect of products which you have already provided before, which goes on a query to query basis billing. So today you get a ticket, Mahindra does the job, and then the bill is raised immediately. So the variations are diverse in the manner in which revenue is booked in the IT segment also. Same goes for automobiles. The automobile segment is basically working on a product sale basis. So you get your raw materials, your components, you assemble it, you integrate it, and then you roll out the vehicle from the Mahindra manufacturing factory. And then you give it to the showrooms, and then you book your revenue depending on what is your arrangement with the showrooms. So this is a product-based company. MDSL also is a project-based company. So the revenue indicators, revenue recognition principles are absolutely different for each of the segments. And therefore, mere looking at the profit and loss account and the prior trends is not adequate for us to do a future predictive analysis. Because each industry is unique, each industry has its own threats, has its own weaknesses, has its own strengths as well as opportunities. So we have to look at the results from the purview of these businesses so that we can make us a reliable prediction about the future of this company. And that is why operating segments becomes key to and understanding the financial statements. It is key to understanding how the entity is operating. Typically, in the financial statements, what is most interesting is the first is your consolidated results. Nobody is interested in standalone results. Let me be very frank with you, because standalone results don't give us the true picture. If I talk about Reliance standalone will have petrochemicals business, the profits coming from there. And then as a subsidiary, it will show its investment in Reliance Jio Infocom, Reliance Retail, Reliance Trends, Reliance Smart, Reliance, whatever it is. Okay, so it has hundreds of subsidiaries. So it will show all of that only as an investment item. But you as a shareholder have invested in Reliance's share, and you have invested because it is getting lot of revenue from the telecom business. Yes, although telecom businesses shares are not yet public, but you have invested because you are believing that you are going to get the revenue from Reliance telecommunications business. That business is what is propelling the share price of Reliance. So therefore, you will obviously be interested not in standalone profit and loss, but in the consolidated profit and loss. So this is the first thing that you view, that you should be viewing. And after this, the immediate second thing that you would be viewing is, how is my segment reporting? How are my business performing? How is Reliance Jio performing? How is Reliance Retail performing? Or your Mahindra, How is the automobile segment performing? So that is why this becomes a very crucial standard from the perspective of practical applications. Okay, for your exams, it's a mediocre standard. Okay, you will get questions every one or two attempts. This has been coming, and it is a plain, simple, vanilla question that you get. You don't get anything extra, anything complicated in this. Okay, so now that is the reason the standard is important. Okay, now. This was the brief outline about why do we need to have segment reporting. How is it important? Now the question is, sir, we had AS 17. We have Ind AS 108. What is the difference between both of them? Is it the same? Is it different? If it is different, what is different? Some things are same, but the fundamental basis on which the standards are based is different. Okay. The reporting criteria, most of it would be similar to AS 17, what you have seen. But the fundamental requirement, that is identifying the segments, that is what is going to be different. That is what is going to be different. So, for example, not for example, but to explain how it is different, I have AS 17. I had Ind AS 108. Now, when I talk about AS 70, the segments were identified based on a risk and reward approach. The segments were identified based on a risk and reward approach. And this identification was typically conducted by the accounting and finance team. Okay. That means what? The accounting and finance team, which is seated in a room, passing journal entries, accounting for invoices, making the payments, doing the back end work, and then presenting the financial statements, preparing it, giving it to the auditors, handling the audit, handling the tax compliances. These were the guys who adopted the risk and reward approach and identified the operating segments. And basis their identification of business segments, they would ultimately do a segment reporting and submit it, and that would be the end of the process. Now, I want you to tell me and think about it carefully and answer. Is the accounting and finance team the right set of people to identify the segments, or should there be somebody else more connected with the operations to identify the operating segments? What do you guys think? Should it be the accounting and finance team who should identify this, or should it be somebody closely connected with the operations who would do a better job at identifying the operating segments? Come on, what do you guys think? Yeah? Namrata, Geeta, yes, what do you guys think? Yes, it should be somebody else who is closely connected to the operations. See, I am a finance guy. You will be a finance guy. We are good in numbers. We are good in analysis. We are good in preparation and presentation of financial statements. We are good in giving analysis of the operations. We are good in telling which product mix could possibly be better based on the numbers which is available. We are the ones who are able to compress the data and give a meaningful output to the management. But we are not concerned with operations. Today you ask me that have you gone to the shop floor and manufactured anything? I'll say no, sir. I'm not capable of doing that because that is not my area of business. But my area of business is managing the funds, managing the working capital, managing the payments, presentation of financial statements, discussions with auditors, tax compliances. These are what are my routine, what is my job profile. But if you tell me, sir, have you gone on the shop floor and manufactured? I'll say I cannot. वो मेरा काम नहीं है. It's not my qualification set. So therefore, the accounting and finance team is not the right set of persons to prepare a segment report. And that is why IND AS 108 came out with the concept of CODM. What is CODM? Sir, इसको हम लोग बोलते हैं Chief Operating Decision Maker. Chief Operating Decision Maker. That means this is the person, this is the set of persons, this is a committee, this is the group, this could be a function, this could be any person who is closely sitting on the operation side and answering two questions. One is allocation of resources to the segments. So this is the first job that he will do. And the second job that he will do is performance review. Performance review of each segment. Performance review of each segment. So both these activities are carried out by this particular person you call, group you call, committee you call, whatever you want to call, you call. The standard calls it as Chief Operating Decision Maker. He is the one person, or this group is that set of people who are very much aligned with the business segments, who are very much aligned with the manner in which the entity operates, who want to view the results through the lens of a particular business segment. Today, if you are working in, let us assume, Mahindra, these are the guys who want to see the operating results for automobiles separately. They want to see it for they want to see it for the aerospace and defense sector separately. They want to see it for the IT sector separately. Not only that, these may be the guys who want to see in the automobile industry, they want to see how much is for the passenger car segment, how much is for the commercial vehicle segment, how much is for the heavy vehicle segment. They want to probably go further down and then break it and want to view it as automobiles into these three categories. They may even go further, stepping down and say real estate, you want to view how much is in the resorts business, how much is in the how much is in the residential business, how much is in the commercial complex business. This is what these guys want to see. If you take it the IT sector, then they want to see how much comes from long-term projects, how much comes from daily service requests. Maybe that is what they are going to be interested in. And that is why the chief operating decision maker is the person who has his ears. He has his ears close to the ground on the business, right? He is the one who can sense a trouble in a particular segment because that person is closely connected with the business. Okay, so you have these conflicts which are happening, maybe the Russia-Ukraine conflict or maybe the Israel-Palestine conflict. These conflicts could possibly be having ramifications for the operating decision maker sitting in India. So, for example, I had a company which had its setup. It was a multinational and it had its one of its co-subsidiaries in France, in Russia, and it had one of its co-subsidiaries in Poland. Because of the Russia-Ukraine conflict, Russia could not sell directly to Poland because Poland was avoiding it. And therefore, the business wanted the goods to be shipped from Russia to India and thereafter from India to Poland because India did not have anything to do with the conflict. So the business was carried out so much. But who decided this? Why did this come into picture? This was decided by the group's chief operating officer. So he knew that this kind of issue could arise wherein goods could not be shipped directly from Russia to Poland. And in spite of the huge transportation cost, the chief operating officer said we will have to ship the goods to India and India will further on ship it to Poland. This has actually happened. I'm telling you one of the facts that we have come across. Okay, so now in view of this, we have to look at how the chief operating decision maker reviews the results, reviews the management information reports, reviews the dashboard that are presented to him. How does he want to review? And basically, his viewpoint is what should be presented in the financial statements. I cannot any longer present the viewpoint of the accounting and finance team because these are not connected with the business operations. They are connected with business, but they are not connected with business operations. And therefore, this is the radical shift that has come about in Ind AS 108, where we are adopting a high-level management perspective on the segments. We are providing a high-level perspective on the segments. We are basically saying this is how the management views its results, and that is why we have presented it to you in the same manner. If you look at the risk and rewards based approach, the accounting and finance team will probably say, I'm just giving you a hint, real estate is project based. Aerospace and defense also is project based because it is for long-term contracts. So basically the risk and rewards both work on percentage of completion basis and realizations thereafter. And therefore risk and rewards appear to be similar. And therefore there may be a chance that real estate and aerospace and defense end up getting merged as one reportable segment, which is a crime. In my opinion, it is a crime because real estate has a different set of indicators, a different market. Aerospace and defense has a different market altogether. We cannot combine it merely on the saying that the risk and rewards appear to be similar. No. We have to therefore look at how the chief operating decision maker views the results each month, MIS, what is generated for them. That is what we are going to be looking at. Okay. So who is the chief operating decision maker? He is the guy who takes decisions relating to operations. He is the who takes decisions relating to the operations. There is no designation. Please be careful. There is no designation which is prescribed in the standard. That means the standard does not say the CEO or the COO or the chief technology officer are the guys who are CODMs. No. The CODM could be an individual. The CODM could be a group of individuals. The CODM could be the board of directors on the executive committee. It could be anybody. Okay. It's not restricted to one individual, one designation. It could be somebody as simple as a general manager in the company. It could be somebody as simple as a general manager in the company. And therefore, when you and I talk about CODM, we have to keep that in mind that it's not one person. It could be single or a group of people. Anything could be possible. Anything could be possible. Okay. He is the guy who has the best knowledge of the segments. He is the guy who knows how the business is operating. He is the guy who probably knows how the working capital requirements are there. Because, for instance, in our example, the automobile industry is basically working on cash and carry model, whereas the real estate works on project-wise completion. The IT has a different set of models, and therefore the working capital, the cash flows, the profits, all these have different timings, and therefore we are going to follow what the chief operating decision maker views, what is his perspective, and we are going to present that. Okay. So coming to your notes, what is the core principle of Ind AS 108? disclose information to enable users to evaluate the nature and financial effects of the business activities in which it engages. So, in our example, it engaged in real estate, in IT, in hospitality, in aerospace and defense, in automobiles. So, the various business activities in which it engages, as well as to give information on the economic environment in which it operates. These companies are MNCs. They could be having operations outside India. So that is also one of the manner in which the chief operating decision maker could view the management reports. Okay. So now judgment is required for applying 108. The management should consider the core principle for the purposes of segment disclosure rather than relying on a set of rules. Earlier, we had relied on a set of rules, and now we no longer need to do that. We have to understand the core principle. So, essentially, what is my intention? The entity should provide information used by management that will allow users to understand the entity's main activities, location, and performance. What is important is it allows the users to review segment information from the eyes of the management rather than the risk and reward approach, thereby enhancing a user's ability to predict the actions or reactions of management that can significantly affect enterprises prospects for future cash flows. Are we clear with this part? Yes. Are we clear with this? Anybody has any doubts so far? Yes. Anybody has any doubts? Any questions? Yes. All clear. Tanisha has confirmed. Yes. Okay. So let us proceed further. Let us proceed further. Okay. Let us proceed. Okay. Now, where do I disclose this? Where do I disclose this information? Okay. First of all, applicable to companies where Ind AS apply. In that, we are having two sets of financial statements. One is standalone, one is consolidated. So suppose I do not have a subsidiary. I do not have a subsidiary. I am a single entity. And if I am a single entity, I prepare only one set of financial statements called standalone financial statements or separate financial statements. Now, these financial statements is the only set of financial statements I present. And therefore, if Ind AS applies to me, I will have to do the segment reporting in the standalone financial statements. It is standalone financial statements. So it becomes mandatory. Consolidated, I don't have a subsidiary, so I don't consolidate, hence it is not applicable. Hence it is not applicable. Whereas if you are an entity requiring to present consolidated financial statements, then reporting the segment reporting in the consolidated financials becomes mandatory, and in the standalone financial statement it becomes optional. It becomes optional. There is no point in disclosing it in standalone also, in consolidated also. Consolidated you have disclosed, it's done. You do not have to disclose it again in the separate financial statements, but voluntarily you can do it. Voluntarily you can do it. Okay. Namrata has asked a question. What will be included in economic environment? Well, economic environment could be, for example, the geographical locations where the entities, businesses could be carried out. For example, India would have a different economic environment. UAE could be having a different one. Russia could be having another one. Singapore could be having another one. And therefore, these are the various economic environments in which it operates. Basically the locations. Basically the locations. Is it okay? Because the locations affect the manner in which a business operates. It affects the manner in which a business operates. Okay. So that is economic environment. The next part is, yeah. So scope of Ind AS 108. If you are not required to present consolidated financial statements, please report it mandatorily in the separate or standalone financial statements. But if a company is required to present consolidated financials, then segment reporting can be done for the consolidated financial statements on a mandatory basis, whereas on a standalone basis, the same is voluntary or optional. Are we clear with which companies and how we have to present it? Yes. Now, when I say voluntary, if I give the heading as segment reporting, if I give the heading as segment reporting, then you have to ensure that you comply with Ind AS 108. Basically, I'm talking about this option. The other cases, it's mandatory, so therefore, it will be following the Ind AS 108 requirements. But in this case, segment reporting की अगर हम बात करेंगे, if we use the term segment reporting when Ind AS 108 is optional, then at that point of time, we are going to treat it as, or rather, if we use the title segment reporting, we have to ensure we follow the Ind AS 108 requirements. ऐसे बोल सकते हो that Ind AS 108 has put a patent on these words. If you see these words anywhere, that information should be in line with Ind AS 108. Are we clear with this? अच्छा, sir, मैंने नाम बदला तो suppose I give a name like information pertaining to businesses or divisions. Yes, if you give something like this, then there is no requirement for you to comply with Ind AS 108. It is something you want to do it yourself. So you're most welcome to do it. Are we clear with this? Yes. Are we clear with this? Yes. Yes. So absolutely. Other Tanisha has confirmed, but what about the others? Shruti, Mohammed, Geeta, Vanshika, Shailesh, Viraj, Mohammed, Yadu. What do you guys think? What do you guys think? Are you clear with this? Yes. You are going to use the words segment information and comply with 108, or use any other title and there is no need to comply with Ind AS 108, specifically for the case where it is on a voluntary or optional basis. Right, जहां पे mandatory है, you don't have an option. You anyways have to comply with Ind AS 108. So this title presentation particularly pertains to voluntary presentation in the standalone financial statements where the entity is mandated to prepare consolidated financial statements. Okay, so that takes care of scope of Ind AS 108. So when I talk about identification and disclosure, we follow a four-step approach. The first step is identifying the CODM, the Chief Operating Decision Maker. The next step is identifying the operating segment. The third step is determining the reportable segment, and the fourth one is disclosures. Okay, so we are following a management approach rather than a risk reward approach, and therefore what is considered by the management as a separate source of revenue, any business activity considered by the management as a separate source of revenue will be considered as an operating segment. So basically the management's lens is fitted on us so that we can understand the business from the perspective of the management. The operating results of such operating segment are regularly reviewed by chief operating decision maker to make decisions about resource allocation and performance measurement. I explained this also already to you. So step number one, chief operating decision maker. Step number two, identifying the operating segment. Step number three, identifying the reportable segment. And then the disclosures. Okay. So now coming to step number one, identifying the chief operating decision maker. Okay, just give me a minute. Okay, so now coming to chief operating decision maker, who is the chief operating decision maker? Understand the concept, it is a function. It need not be a person or any designation. So whenever you see the question CEO, CFO, CXO, CTO, manager, general manager, don't go by that. You look at that information which tells you who is doing the decision making. And that is the person who will be the chief operating decision maker, or that will be the committee which will be designated as the chief operating decision maker. It need not be an individual person, nor is it a designation, nor is it a designation. All right. So this is the concept. Put this in your brains. Okay. Put this in your brains. And then what is the job of the chief operating decision maker? The function. See, they never say the person, they say the function. The function involves allocation of resources. If my automobile industry is performing very well, I have to allocate more resources to that to ensure that its revenues grow. If my real estate division is not performing very well, then I have to decide why it is not operating very well. I will have to view it from I have to view it with extra care. I have to view it with extra caution. And basis that I will come to a conclusion that do I need to pump in more resources? Do I need to pump in more labor? Do I need to change the labor? Do I need to change the materials? Do I need to negotiate better with my suppliers? Do I need to collect money faster from my customers? These are the questions that will be answered by the chief operating decision maker. Allocation of resources, assessment of performance of the operating segments of the entity, and finally, making strategic decisions about the entity segment. What do you mean by strategic decisions? Whether you want to continue or whether you want to discontinue or whether you want to introduce a new process or whether you want to introduce a new what you can say a new manufacturing technique, or whether you want to bring in machinery which can save up your time and ensure the output is coming at a faster rate, whether you want to carry out extra training for your labor. All these are strategic decisions that the CODM will be taking for a particular business segment. So this is decided by the chief operating decision maker. Acha, who can be the chief operating decision maker? So finally, we come to the examples of CODM. It can be individuals like CEO or COO. So in small companies, you could be having somebody like a general manager or CEO or COO who basically has his ear on the ground. Okay. He is the one who immediately comes to know something is wrong, something is right, something is going to happen. He will be the one person who comes to know the earliest. And therefore, it could be these individuals like CEO or COO. It could also be a committee. It could also be a committee like a senior management or a board of directors. Anybody, okay? But what is important is it cannot be a supervisory board that just approves or reviews the decision. Okay, what is a supervisory board? So in the corporate hierarchy, typically you will be having the CEO, COO, who are the what you can say, who are connected with execution of the jobs. Okay, so these are the guys who will order that, look, we need to do this, please carry out this activity. So he is the chief executive officer, the chief operations officer. They are closely connected with carrying out the jobs. They will be the ones who will be held responsible for the manner in which a particular segment operates. Okay, but who is the supervisory board? This is the board which sits on top of this, right? So if I have to take an example, in India, we have the parliament, right? Where you have the prime minister and the cabinet of ministers who are actually executing the decisions relating to the running of the country, right? Or if you talk about the state, it is the chief minister and his cabinet of ministers. However, above the chief minister, we have one person who is there. जो कभी दिखता नहीं है in the functioning, that person is available for ceremonial purposes. किसी का inauguration or some things are there. That person is called as the governor. Or if you talk on the country level, that person is known as the president. President in India is largely a ceremonial position. I'm not taking away the importance of the president, right? The president has very vital roles when it comes to a deadlock or when it comes to looking at constitutional when it comes to ensuring constitution is adhered to. Those are all the functions conducted by the president or the governor. But in day-to-day functioning, do you see the president sitting with the prime minister on day-to-day functioning and legislations? Do you see the president coming to the Lok Sabha or the Rajya Sabha to carry on discussions? Answer is no. Similarly, you will not see the governor coming to the Vidhan Sabha to attend the meetings. No, these are the guys who are on a supervisory level. They are ensuring that the cabinet of ministers does the job, ensuring that the constitution is adhered to. So they are on the supervisory level. When bills are discussed, when bills are debated upon in the parliament, you will not have the governor or the president. The governor or the president only give their assent, they only give their permission to the bills which are passed by the state or the central government. They have to give it. They may have certain queries, but they will have to give assent. They cannot keep the things pending, right? They cannot keep the things pending. They are not the ones who do the job. So similarly, in a corporate structure, you are having the CEO, the COO. This is the leg which does the operations. Beyond this, you will be having the supervisory board, which comprises probably of the investors, which comprises of certain independent directors. It could be anybody. But these are the guys who review the decisions taken by the CEO or the COO. And therefore, the supervisory board is not connected to the ground realities. The supervisory board is connected to the CEO, COO, or the CODM. Are you able to follow? They will only approve if anything comes up to them. Like, for example, they take a strategic decision of shutting down a particular line of business. For example, tomorrow, that did not happen, but tomorrow Mahindra takes a decision to shut down its aerospace and defense production utility capacity because of poor profits. Now, if the CEO or CEO or that group or the CODM makes this decision, then this decision is a strategic decision. You will have to communicate it to the supervisory board, and the supervisory board will probably review the indicators and then they will say, okay, fine, you can go ahead and exit it. Okay. So in this case, the supervisory board is only an approving authority. It's nothing beyond that. So the supervisory board cannot be the chief operating decision maker. Generally, the CODM is the highest level of management. Generally, it is the highest level of management. What is the fundamental criteria? It is to ensure correct identification of the reportable segment. It is to ensure correct identification of the reportable segment. So this is my chief operating decision maker. Very, very important in Ind AS 108. Basically, the CODM is not an individual, it is a function. The function could be carried out by an individual or a group or a committee, जो नाम देना है दे दो, but this is the chief operating decision maker. What does it involve? What does it do? It is deciding allocation of resources. It is assessing the performance of each segment, and it makes strategic decisions about the entity's segments. So this is what is your chief operating decision maker in brief. Okay. Coming to the next one. Can a committee of non-executive directors be a chief operating decision maker? Have you heard non-executive directors? Who are executive directors? Who are non-executive directors? Please let me know. Okay. What do you know? Okay. Thank you, Tanisha. Thank you. Yes. Thank you for the appreciation. All right. Okay. Come on, guys. Tell me. What do you understand by non-executive directors? Who is a non-executive director? Who is a non-executive director? Have you studied? Yes. Kirti, Yadu, Vanshika, Tanisha, Mohammed, Shruti, Shailesh, Viraj, Yadu. Who is a non-executive director or who is an executive director? Basically, an executive director is on the payrolls of the company. Typically, that is how it works. Okay. Executive bolo ya whole time director bolo. WTD, whole time director. He is a salaried employee of the company and he has risen to the ranks of a director. But a non-executive director is the outside members who bring expertise to the board, who are supposed to bring expertise to the board by virtue of their diverse background. Okay. So you are having companies where you have chartered accountants, where you have academicians, all these people come and sit on the board because they are expected to provide their expertise to the board. So the non-executive directors is a part-time director, that's right. And they do not have any management responsibilities. Absolutely right. Right. So they are not the part of execution. They are not active executors. They are more of designers. That's absolutely right. So these are the people who do not involve in allocation of resources. They are more fitting into a governance role. Governance means what you had all these scams and all which happened due to poor governance. So the non-executive directors are brought in to ensure that appropriate questions are asked and answers are received. So this is the role of a non-executive director, but the non-executive director is typically not involved in resource allocation, and therefore, the non-executive director would ideally not be a chief operating decision maker. It would not be a chief operating decision maker. A function BOD might include NEDs whose sole responsibility is governance. Such a function would be the chief operating decision maker if the most significant operating as well as strategic decisions are made by that function, even if NEDs do not participate in implementing such decisions. See, the first thing about being a professional, and take it from me, this is pure advice from practical experience. The first thing about professionals is you don't give a straight answer. Okay, though it may seem very unfortunate, but you never give a straight answer. Can a committee of non-executive directors be a CODM? You will say yes, and that yes is not an unequivocal yes. It will come with yes, but. Okay. Or if you say, can a committee be a CODM? No. But, okay. So there is always ifs and buts in professional life. Yes. No professional will come and give you an unequivocal assurance about anything. And this I'm not only talking about chartered accountants. You go to the lawyer, they will also give ifs and buts. You go to a doctor also, a surgeon also. Even that surgeon will say, this is there, but. So you will always have ifs and buts in professional life. You have to be accustomed to that. The same way your answers also will have to be worded, right? You have to give a holistic approach to your answers. So here they are saying NEDs will generally not be a CODM, but where they are part of a committee that is involved in resource allocation and strategic decisions, they could be a CODM, though they do not participate in implementing such decisions. So what they are trying to say is NEDs directly will not be the CODM, but if they are part of the committee, then they could be CODM, even though they refrain from voting on such issues. So that is what is the conclusion of this particular question. Okay. So now we come to three small questions. You will only answer this. My only job is to ensure that you have understood who is the CODM. Okay. So now question number one. The executive committee of XYZ comprises of the chief executive officer, the chief operating officer, and the president. The committee assesses performance and allocates the resources. Each committee member has a single vote. Identify the CODM. Okay, so tell me, question number one. Who is the, I'm sorry, I think we lost the second. Yeah, I hope it's visible now. Okay, I hope it's visible now. Okay, yeah. Okay. The executive committee comprises of the CEO, CO, and the president. The committee assesses performance and allocates the resources. This is your key line, the punch line. Okay. The committee assesses performance and allocates the resources. Okay. So it is not, again, Geeta, don't go by designation. The committee as a whole does the job of performance and allocation of resources. So it is not the CEO or COO who is the CODM. It is the committee which is the CODM. Okay. This is the chief operating decision maker, not the CEO individually, not the COO individually, not the president individually. All of them put together decide, debate, fight, argue, come in support. And then they say, we will allocate these resources to this business. We are going to review the performance in this manner. So all these people together come to an agreement. And therefore, the chief operating decision maker is the executive committee. Don't go by designations. Don't go by designations. Okay. Come to question number two. Consider the facts above, except that President can override the vote of the committee. Now you tell me who is the chief operating decision maker. Yes, Manoj, Muhammad, Viraj, Yadu, Shailesh. Boys are not answering. Boys are sleeping on Sunday morning. Yes, where are the boys? Yes. Now, COO means Chief Operating Officer. That's right, Kirti. COO means Chief Operating Officer. Yes, Namrata is right. I'm waiting for the others to answer. Muhammad is answering. Good. Yes. Tanisha has also answered. Good. Manoj has also answered. That's right. Absolutely. So the president is having the power to override. So therefore, the president can override the vote of the committee. So in this case, the president is the individual. So therefore, he is the CODM. The president becomes the CODM. Okay. Question number 3. Facts are similar to question 1 except that the supervisory board reviews the operations of the executive committee. Identify the CODM. Identify the CODM. Namrata is absolutely right. Yes. All right. What about the others? Question number 3. Question number 3 is an extension of question number 1. Okay. Yes. Hmm. Good. Some people are saying that supervisory board is the CODM. No, supervisory board is only reviewing the operations. Supervisory board is only reviewing the operations. It is not taking any decisions. I told you the example. I have the prime minister and the cabinet, and on top of that, I have the president. Who is taking the decisions, who is taking the passing the laws, who is debating in the parliament? It is the prime minister and his cabinet of ministers. The president is a ceremonial function, a supervisory function. So who is the chief operating decision maker if I have to talk from the government's perspective? From the government's perspective, the chief operating decision makers becomes the prime minister and its cabinet. I'm talking in terms of India. Okay. In the case of a state, I have a governor and I have the CM and cabinet. Okay. So here, who becomes the chief operating decision maker? These are the guys who are on the ground, who are assessing, who are taking decisions, passing the laws, debating in the parliament houses. So these are the guys who are the CODM. The president and governor are only supervisory positions. Similarly, in the corporate structure, the supervisory board sits here. The supervisory board sits here. Okay. Their job is to ensure basic structures are not disrupted. Okay. Whereas the actual working committee sits here. So this is the CODM. This is the CODM. Okay. So that's about it. So the supervisory board can never become your CODM because their job is only to review, nothing else. So the executive committee will be the uh, uh, chief operating decision maker, not the president, because the facts are coming from question 1, not from question 2. Okay. So Viraj, it's not from question 2, it is from question 1. So question 1 had all the three of them deciding things together. And therefore, the committee itself becomes the chief operating decision maker. Okay. Now, let us come to the next most. We are going step by step. Okay. The first step is identifying the chief operating decision maker. Once I do that, the next step is identifying the operating segments. When I identify the operating segments, I will then identify the reportable segments from the operating segments. And after the reportable segments, I will come to step number 4, that is the disclosures. I come to step number 4, where it is making the disclosures. That's it. So it is a 4-step process. I did step number 1 so far. Step number 2 is what we are going to do now. Okay. So let us come to step number 2. Identify operating segments. So see, earlier the name of the standard also you can see. What was the earlier standard name? AS17 में नाम क्या था? Segment reporting. Ind AS 108 में नाम क्या है? Operating segments. It may seem the नाम में क्या रखा है, but the name has everything. Earlier, segment reporting. So the job was basically restricted to the finance function. Segment reporting, इनका काम है. You know how segment reporting used to be done? Last day, audit report is going to get signed. So therefore, at that time, the finance team would come. Acha, this is the profit and loss. These are my segments. Just do the allocation, identify the revenue, finish it. It would be a 15-minute job that would be done by the finance team. This used to happen in reality. Okay. It was the last item of disclosure. That also finance team used to do, because otherwise auditor would put a qualification saying that accounting standards were not complied with. इसके लिए that finance department would make dirty faces and make the segment reporting disclosures. बिकॉज वो बोलते थे क्या फिर से ऑडिटर बोलेंगे कि अकाउंटिंग स्टैंडर्ड कंप्लाई नहीं हुआ, करो जल्दी करो, कैसे भी करके खत्म करो. That was the attitude in which segment reports were being prepared. Now, the job is not segment reporting. The job is operating segments. So we have to identify the operating segments. The operating segments are coming from the chief operating decision makers table. It is no longer a function of finance team. And therefore, we are going to identify based on this particular flow. Based on this particular flow. This is taken from the study material only. It's simple, nothing very different. Okay. So now, the first question that you have to meet all these three conditions. Okay. Condition 1, condition 2, condition 3. If you meet all these three conditions, it becomes an operating segment. Operating segment will not necessarily be a reportable segment. वो बात याद रखना, ठीक है? We are only identifying the segments now. Out of these segments, what should I report? That is in step number 3. पहले हम decide करेंगे what are my operating segments. So the first question is, does the component generate revenues and or incur expenses? That is, including revenues and expenses relating to transactions with other components of the same entity. That means what? Does the component. So let us say I have segment A, segment B. Okay, two segments are there in my business. So the first question that is asked is, does segment A generate revenues, including transactions with other components of the same entity? That means external plus internal revenues. External plus internal revenues. Internal revenues means what? Transfers. Internal revenues means what? Sir, it means transfers. So therefore, does it generate external revenue? Answer could be yes. Does it generate internal revenue? See, sometimes there could be the case where we are supplying or we are manufacturing something purely for captive consumption. We are manufacturing. Segment A is manufacturing something for captive consumption. B is going to consume that and selling it outside. So therefore, the standard says do not look only at external revenues. If I look at external revenues, segment A will not have any importance at all. And therefore, segment A could be a very strategic segment because it is providing what segment B requires. It is providing what segment B currently requires on an immediate basis. And therefore, segment A or segment B, we are going to answer the question, does it have internal or external revenues? If the answer to that is no, there is no revenue, sir. We are a cost center. For example, human resources, HR department. HR department कुछ काम करता है in terms of revenue generation? Answer is no. Does it do any inter-unit transactions? Answer is no. So the HR department typically will never be an operating segment. You take your administrative department, okay? You take your housekeeping department. These are the departments which are carrying on the support functions of the organization, but they do not generate revenue between themselves or within the company or outside the company. These are the guys who are purely within the company to perform the support functions. So they will not be regarded as a separate segment. They will be clubbed with other operating segments or other segments, and then they will be aggregated and presented together. So therefore, you will not include that. So the first question to ask is, does this generate revenues or not? Revenues could be internal, revenues could be external. Okay. All right. So this is the first question. See, if your department is generating revenues, if the component is generating revenues, uska cost bhi hoga. There will be cost also. Because to generate revenues, you need to get your goods, you need to get your services, you need to have employees. So direct cost also will definitely be there if revenues are there. And therefore, you will have to ask that question. And if the answer to that is no, then it is not an operating segment. If the answer is yes, then you then ask the second question. Are the components results reviewed regularly by the CODM to make decisions about resource allocation and to assess its performance? If the answer is no, then it's not an operating segment. But if the answer is yes, then it becomes an operating segment. Is discrete financial information for the component available? Discrete means separate. हम आइडेंटिफाई करना चाहिए, हमें आइडेंटिफाई करना चाहिए. We have to be able to identify what is the information, what is the financial information available. It will mostly be there. Okay, it will mostly be there. You have a segment revenue, so uska related cost will be there. You will be having the related expenses. Data will be there. This third condition is a very, very, very remote condition, which generally companies will say that discrete financial information is always there with us. Okay. So therefore, if that is also no, then the component is an operating segment. Okay. So these no are or conditions. These no's are or conditions. If any one of it becomes no, it will not be an operating segment. But if all the three conditions are fulfilled, then it becomes an operating segment. It becomes an operating segment. Are we clear with step number 2? Are we clear with step number 2? Yes. Yes. Okay. Namrata, I hope your query is sorted. Yes, I had explained already that expenses will be there if revenue is generated. Yes. Okay. So that takes care of step number two. So step number one, identify CODM. Step number two, identify operating segments. You are having, uh, okay, fine. These illustrations, go through it. It's not very important from examination perspective because lay deke these questions will not come. But still, they have just given you some illustrations, so just go through them as homework. Okay. Nothing special from my side is required. I have done the explanation task. Just read through it. Okay. This also I'm leaving it to you for homework. Concept of segment manager. Okay. So it's just about looking at you will be having a manager assigned to each segment, or the CODM itself may be the segment manager. Okay. A single manager may manage more than one segment, or you may have a matrix form. All that is just theory. Go through it. From examination perspective, I don't see anything majorly important in this. Okay. It's just theory. एक बार पढ़ने के लिए पढ़ लो. Okay. All right. So these also you can go through for homework. Okay. All right. Now, let us move on to the next part of this only. Okay. Let us move on to the next part. Your operating segments could have certain, your business could have certain functions integral to business. Now, see, the very first question which I asked, the very first question which I asked when I was doing the identification of operating segment is, does the segment generate revenues? Does the segment generate revenues? If it is yes, then we went on. If it was no, the answer was clearly it is not an operating segment. But there is an exception. There is this exception. I told you na answer kabhi सीधा सीधा yes no नहीं होता है. It is not an operating segment, but if the function is integral, it could be taken as an operating segment if it is reviewed regularly by the chief operating decision maker. So, for example, where activities of a function are integral to the company's business, like for example, the research and development function. What do you mean by research and development function? Pharmaceutical companies, IT companies, engineering companies, highly sophisticated design companies. These companies have a very strong R&D department. The R&D department is working on creating new designs, is working on saving the costs, is working on alternative methods of production, is working on ways in which manpower can be made more efficient. All these are done by the R&D. But the R&D is unfortunately only a cost center. It is never a profit center because R&D does not result in any turnover or it does not result in any output. The R&D gives rise to certain findings which it gives to other departments and they follow those findings and apply the development. And therefore, the R&D by itself does not meet the first condition. Does the segment have its own revenues, internal or external? Answer to that will be no. But if the CODM reviews the R&D separately, there is discrete information about it which is available. And since it is integral to the company's business, this would be regarded as an operating segment in itself, even though it does not have revenues, even though it does not have revenues. Are we clear with this? Yes. So don't jump into the well and say that R&D, no revenue, not an operating segment. No, it is an operating segment if it is reviewed by the CODM, if it is having discrete information, if it is having discrete information. Discrete means separate identifiable information. Are we clear with this? Yes, are we clear? समझ में आ रहा है अपने को? Yes. Now, coming to the next one. Coming to the next one. Discontinued operations. Discontinued means I have stopped a particular product line or a particular service line, but I have to disclose it separately in terms of Ind AS 105 because I have stopped it. So I need to highlight the attention that this year onwards, that particular activity is stopped. Now, the particular thing is if the discontinued operations continues to engage in business activities whose operating results are reviewed by the CODM, and there is discrete information available, then it would meet the definition of an operating segment. It would meet the definition of an operating segment. I am not very much sure about what is this. If the discontinued operation continues to engage in business activities, not very clear what it could seem a little ambiguous because discontinued operation तो discontinue हो चुका है. So why it continues to engage in business activities is a bit of a question mark. But otherwise, if we are on the verge of discontinuing and we are just lapping up whatever is left out, then yes, it makes sense. So if it is reviewed separately, then at that point of time, it will be regarded as an operating segment. Yeah, so as I explained, वो थोड़ा सा ambiguity is there. If the discontinued operation continues to engage in business, I don't know how is that possible because one side you are saying discontinued, the other side you are saying continues to engage in business activities. So possibly it could mean like selling of your assets, disposing of your inventory, disposing of your debtors, receivables, making the payments to creditors. Maybe all these things together, it is saying that it is engaging in business activities. Okay. So, but anyways, there is no clarification. This small ambiguity is there at this point of time. Okay. All right. Now let us come to the next set of principles, that is aggregation of operating segments. What do you mean by aggregation? Abhi, we have identified those operating segments in the previous flowchart. Okay. Now I will have to aggregate these operating segments. I will have to aggregate these operating segments. So let us take an example. So you have IHCL, okay, or you take Marriott, or you take ITC, whatever you want, you can take. So let us take the IHCL. IHCL, yes, Taj, that is the Taj Group. Okay. Now IHCL's hotels, they come under 4 to 5 categories. Okay. One is Ginger, business stays, budget hotels. Yes. After Ginger, you are having the Vivanta, which is business hotels. After Vivanta, you are going to have the Gateway Resorts, which is 5-star, not very costly. Then you would be having the Taj Resorts. Okay. Taj Resorts, which is high-end, which is absolutely high-end. Okay. And then you are having certain luxury properties. Okay. Luxury properties. Okay. Now, the question is, each of them are separate. Sir, why? Because understand, the revenue models or the category of customers, the frequency or the occupancy, all of these are totally different for these segments. Okay. Ginger, budget, business traveler, coming in the evening, after the meeting, staying overnight, flying next day morning. Vivanta is again a business hotel, but on the upper side. It is on the upper side, a slightly costlier one. So Ginger could be one where you are having the working class community, the actual on the job employees who come and stay in Ginger, for example. Vivanta could be the one where you are having people like managers, general managers, etc., who come and stay. but basically both of them cater to the business population. Okay. You can see the designs also, they are marketed as business hotels, though you have leisure customers coming and staying, but prime purpose is business hotels. They have a conference room, they have business rooms, they have facilities for printing, facilities for internet access, facilities for docking your computers and carrying on the work, Wi-Fi. All these things are unique to the Ginger and Vivanta brands, and therefore they market it as a business brand, a business hotel brand. Coming to the Gateway and the Taj resorts and the luxury properties offered by Taj, it could be across various locations. Now, these are not for the business purposes. They are not marketed as business purposes. You will never find a business guy who has come on a business tour to that he will go and sit in the Taj resort and attend his business meetings. No, वहां पे वो काम करने वाली feeling ही नहीं है. That mentality itself is not there, and therefore the Taj resorts or the luxury properties or the gateway resorts, these are marked as purely leisure hotels. These are marked as purely leisure hotels. And the leisure hotels also, you are going to treat it as what you call five-star properties. Okay, five-star properties. Vivanta Ginger come in the range of 3 to 4 star. Now the question is, can I aggregate them? Can I aggregate them? देखो है तो अलग segments, because the class of customers it services, the type of assets it uses, the type of training the housekeeping staff has, the chef has, it's totally different for each of the segments. A guy who goes to Ginger every time is in for a surprise when he goes to Vivanta, because the treatment is that way. But a Vivanta guy cannot demand a Vivanta type of treatment in Ginger. But the moot point is, hai to hotel, end of the day, they are business segment hotels. So is aggregation permitted? Is aggregation permitted? Because if I treat them as separate segments, I will have 1, 2, 3, 4, 5 segments to be reported. 5 segments to be reported, matlab 5 segments income, 5 segments expense, 5 segments assets, liabilities, and ultimately reconciling with the final audited numbers. Such a huge task. So therefore, the standard permits aggregation. The standard permits aggregation. So is aggregation consistent with the core principles of Ind AS 108? Is it consistent with core principles? What are the core principles? Yes, what are the core principles? Enable users to evaluate the nature and financial effects of the business activities and the economic environment in which it operates. So this is the first question. Judgment is required. The management should consider the core principle. So this is your core principle. Okay. This ends up being your core principle. Okay. And do not follow set of rules. Rather, your job is to ensure that the users can evaluate the nature and financial effects of the business activities. And therefore, yes. Is it consistent with core principles? Yes. Do the segments have similar economic characteristics? To some extent, they do. They are all residential, they are all hotel properties. The manner in which income is generated is similar. It will be from the inventory of room nights. The room nights are there, you will have similar pattern of customer behavior, and therefore they have similar economic characteristics. You do it on a cash and carry model. Until a customer pays, you have a lien on that customer's luggage. Okay, so that is similar across all the hotels. And are the segments similar in each of the following respects? One is nature of products and services. Answer should be yes to this. Nature of production processes. Answer should be yes to this. Type or class of customers for their products and services. Typically, it should be a yes. Methods used to distribute products or services and nature of regulatory environment. Example, banking, insurance, public utilities. In the case of what you can say, in the case of hotels, it could be the tourism department or the state government, etc., etc. So, are all these answers yes? Then, if that is the case, the segments may be aggregated. They will never say segment should be aggregated. They will say segments may be aggregated. Choice up and. Are we clear with this? Yes, are we clear? So we started off. So if you have to imagine, the whole process looks something like this. We start with operating segments. चलो ढूंढो सारे operating segments, and then we start narrowing down the process. Operating से चालू किया, then we come on to aggregation. Then we come on to aggregation. And after aggregation, we come to the last part, that is the reportable segments, which is the step number 3 we are going to do. So these is the manner, and ultimately reportable segments is what you report. So the first output of multiple opening what you can say, multiple operating segments is not really a what you can say, a cause to worry, because the reportable segments goes on getting lower and lower. Okay, so now this is the identify operating segments and the aggregation principles. Okay, so just go through these questions. Okay, simple theory questions here. I don't have much to do. Okay, so go through this. Are we clear with this? Yes. Are we clear? Because till now, I have only done the theory. Now we are coming to something which is absolutely crucial for us. So therefore, now we are actually starting what could possibly come in the examination. So therefore, are we clear till now? Are we clear till now? Anybody has any doubts so far? Two steps are done. Step number 1, identify CODM. Step number 2, identify the operating segments. तो आज के दिन हमने segment operating segment identify कर लिया. Now the next step is identifying the reportable segments. Do you want a break, 10 minutes, and then continue, or do I continue and then take a break? What do you guys suggest? Yes, what do you guys suggest? Break now for 10 minutes, and then that is the last part. Main part is identifying the reportable segments, which I'll be doing with some questions. That is what is important for you. Then you have disclosures. I'll just tell the disclosures. You can check the format, and that closes the chapter. So if you want, we can take a break now and continue, or we'll continue and I'll leave you guys by 10. What do you think? Shruti, Tanisha, Kirti, Geeta, Mohammed. Yes. Yeah. ठीक है, we'll do one thing. We'll take a break now. It's a proper time to take a break because the next reportable segments we are having certain thresholds. Okay, so I think we can take a break. Anyways, I got majority request for a break. So we'll take a break now, a 10-minute break. We resume at 8:45. Be alert. The next is mathematical. Okay, the next is mathematical, purely mathematical. Very simple. Once that is done, the standard is over. Okay, all right. 10 minutes break, please. Welcome back, guys. We have completed two steps, that is identifying the chief operating decision maker, as well as the next one, that is identifying the operating segments. Operating segments also permitted you to enter into an aggregation criteria where similar segments could be aggregated. Now we come to the most important part, something where you will be likely examined, that is identifying the reportable segments. Okay. So we start with the business. The business condenses to operating segments. Operating segments condenses to reportable segments after the aggregation criteria. The reportable segments is what is actually going to get reported. Okay. So now, what do we mean by the reportable segments? So here we are having certain quantitative thresholds. We are having certain quantitative thresholds. Okay. So quantitative means what? Quantitative means numbers. Numbers means our job. Okay. So quantitative thresholds. Okay. So now what do you mean by a quantitative threshold? What do you mean by a quantitative threshold? First one. First one. Okay. All this is written, you don't worry. Okay. Before that, you can just note this down. An entity should report an operating segment after applying aggregation criteria only if it is material. Only if it is material. And a segment is considered to be material if it meets any of the following three quantitative thresholds. Any of the following three quantitative thresholds. And these thresholds is what is the summary for you to remember in this chapter. Okay. Rest are all theory. I can still give a relaxation, but this is the only thing that you have to remember. The first one is segment revenue. When I say segment revenue, I mean internal plus external together is greater than or equal to, that means at least 10% of the combined segment revenue. Of the combined segment revenue. Again, this segment revenue here is internal plus external. So you either meet this one or you meet the second one. Segment profit in absolute terms. In absolute terms is greater than equal to 10% into higher of A. combined segment profit, or D, combined segment loss in absolute terms. In absolute terms. And last one is segment assets is greater than equal to 10% into combined segment. Okay. So these are the three conditions. These are the three conditions separated with an or. Or. Okay. Separated with an or. Are we able to note this down? Are you noting this down? Okay. Note it down. Yeah. Okay. Fine. I know there are a lot of questions, particularly the second one, but we will note it down. We will discuss them separately. Okay. I think these items are probably not included in the notes. Yeah, I thought so. Okay. Key points. First one. All segment terms. That is segment revenue, segment profit, segment assets should include only operating items. Non-operating items such as interest income, non-trade investments, etc. should not form part of segment revenue or assets. It's a very specialized disclosures that we are doing. Okay. It's purely operational. It's not related to anything unoperational. Non-operational items are pulled to a separate common segment and disclosed under that. Okay. So this is the first point. Second point, segment revenues would always include internal revenues. Internal revenue can be recorded at the price that the entity determines, as long as the price is disclosed and applied consistently. Okay, as long as the price is disclosed and applied consistently. Okay, these are just general points. Another set of points are there, but I will discuss that once I explain these points to you. Done? Shall I proceed? Okay, done? All right, perfect. So, Geeta, Yadu confirmed, Tanisha and all, hope you have also confirmed. Most of this is already there in your, these are just some extra points. Just give me a minute. I just see if any question is there on this. Okay, yeah. So let us pick up a question on this. Small question, nothing great. You know it. Okay. So I just have to touch a little bit. Okay. And therefore, let us quickly pick it up. So X has identified four operating segments for which the revenue data is given below. Segment A, B, C, D, you are given the revenue data. External revenue 50 lakhs, internal revenue 50 lakhs, total revenue is 1 crore. Additional information. C is a new business unit and the management expects this segment to make a significant contribution to external revenue in the coming years. I'll come to that if it is not consistent. Okay, Namrata, just give me some time. Okay. Which of the above segments would be reportable under the criteria identified in Ind AS 108? Okay. So now let us pick it up. Okay, let's start. So now we are given the revenue data only. So this is your answer to question 1. Test your knowledge. Okay. All right. Now let us look at the data. We are given four segments and the revenues. So as per Ind AS 108, a segment is reportable if inter alia, that is among other conditions, its revenue internal plus external is greater than is, why do I get this, is greater than or equal to 10% of combined segment revenue. In the given case, segment A. What is the revenue for segment A? 30 lakhs divided by 1 crore. Rupees 30 lakhs divided by 1 crore. So that is equal to 30%. B. B is how much? 650 by 1 crore. 6.5%. Segment C, 9,50,000. 9.5%. Segment D, 54 lakhs. Are we clear with this? Yes? Yes, perfect. Because Yukta is not come today. Yadu is right. Okay. Did everybody get this? So therefore, segment A, 30% more than 10%, this becomes reportable. Segment B, less than 10%, not reportable. Segment C, less than 10%, not reportable. Segment D, 54%, ends up being reportable. Yes. Yes. All right. Now, this is the first step. So, based on these steps, therefore, segments A and D are reportable segments. Are reportable segments. In absence of profits and assets, comma, their evaluation has been ignored. Their evaluation has been ignored. Okay. So this takes care of the first condition. This takes care of the first condition. Now I'll just deviate for a short time. I'll come back to this question and then we'll come back to our notes. Okay, and then we'll come back to our notes. Let us assume that I'm just deviating. Don't note this down. I'm just deviating. Let us assume I'm having segment A with revenue of 60. Segment B with the revenue of 120. And 140. And I'm having other segments. Other segments 64, 200, 400. Okay. So that gives it 600. Am I right? Total revenue. There is no internal revenue. This is only external revenue. Nothing. There is no intercompany sales. No inter-segment revenue. Okay. So for now, just forget that. No inter-segment revenue. And these other segments are all in all 20 segments. 20 segments. So we are having segment A, segment B, and 20 other segments totaling to a revenue of 400, giving a total revenue of 600. Are we clear with this? Yes. So now, and none of them have inter-sales. Okay, it's all to outsiders. All the segments have sold to outsiders. Okay. Now the question is, this is 20 segments at rupees 20 each. Then only it becomes 400, right? 20 into 20. So 2 to the 4, 400. Now the question is, find out the reportable segments. Find out the reportable segments. Okay. So what are your reportable segments? What are your reportable segments? Well, A is 60, which is 10% of 600. So A becomes reportable. B also becomes reportable. B also becomes reportable. 140 divided by 600. 140 divided by 600. So that gives you how much? 23%. 23%. So B is also reportable. And the remaining 20 segments have revenue of 20 rupees each. So they are below 60, so therefore not reportable. Not reportable. And therefore, your segment data looks something like this. Your segment data looks something like this. A, B, others. Revenue 60, 140, 400. 60, 140 and 400. Achha. Now you tell me, this data is presented to you. Is it useful or do you have any problem with this? Yes. Are you okay with this or do you have a problem with this? Forget, this is external. I'm not concerned about that, Geeta. Let it be external. There is no problem with that. Not internal. That is also fine. The company does not have any inter-sales because each division has an external market, so it is selling externally. So that is fine. I want you to tell me, is there anything that is troubling you in this data? Is there anything that is troubling you in this data? Yes. See, this is 10%. This is 23% of total revenue. But this is 67% of my total revenue. This is 67% of my total revenue. I booked it in others. Sir, वो threshold criteria meet नहीं कर रहा. Each segment is less than 10%. Each segment is only 20. And therefore, we have reported only 33% as a segment revenue, that is of the total, whereas the balance is not at all reported as a separate segment. It is getting clubbed under others. A big chunk of amount, there is no clarity. Absolutely right, Mohammed, right? So therefore, you are not able to get clarity on this. Whereas in fact, that is the bulk of your operations. Okay. So all your expenses, assets, everything, will you go on keeping it in this particular, what you can say, in this particular column? Answer is no. You will have to disaggregate it. You will have to disaggregate. So what Ind AS 108 tells is, and this you had it in AS 17 also, I think, what it tells is, you are going to treat it. You are going to treat it as what? You are going to treat it as the number of segments to be reported should at least cover 75% in revenue. The number of what you can say, the number of segments to be reported should at least cover 75% of external revenue. It should cover at least 75% of external revenue. वो cover नहीं करेगा तो until then you will have to go on what you can say, you will have to go on identifying the segments and doing the you will have to identify the segments and add to the reportable segments. So in this case, 6,000 all are external into 75% is equal to 4,500. So out of 4,500, let us subtract reportable segments, that is 140 plus 60, that is 200, right? So 140 minus 60, that gives you 200. So 4,500 minus 200 is 4,200. And with this 4,300, I will now have to recognize the other segments. Yes, so we have 20 segments at 20 each. So divided by 20. So 4,300 by 20. There's something wrong. No. This should be 600. Yes. 10 extra. Changed the whole thing. Yes. 600 into 75%. 450. Less. Already reported is 200. So we are left with 250. That's right. Okay. So now less reported. So now we are left with 250. Now this 250 is how much? Now this 250, 20 per segment. How much does it come to? 12.5. That means 13 segments. That means from 20 segments, you can report another 13 segments. So 13 plus A plus B, you are going to have in total 13 plus, 13 plus 2, that is 15 segments. Are we clear with this? Yes, because we have to meet the criteria of 75% of external revenue. External revenue is 600. So 75% of that is external revenue. And therefore, when you go there, when you go and do the reporting, what you will have to check is, am I meeting at least 75% of my revenue? I wasn't. With A and B, I wasn't. I was meeting only 33%. I had to extract other segments. And how did I do that? Well, it is 450. That is the total reportable revenue that should have been there. Out of which reported is already 200. So therefore, you are left with 250. You are left with 250. And that means it comes to about 13 segments you will have to report. So 13 segments is a fairly, what you can say, proper number to ensure that we meet the 75% external revenue target. That is not total revenue. 10% is internal plus external. That is for what we had seen. Whereas this one is not 10% minimum. You can is not what you can say. One second, I think I lost it. Yeah. So what is important is you have to ensure you meet the 75% minimum criteria. This is only external. Here we are not going to look at internal plus external. Identifying initial recognition of segments is internal plus external together 10%. But after that, additional segments to be reported will be at least 75% of the requirement. Will be at least 75% of the requirement. Are we clear? external revenues only. Any doubts so far? Yes. Any doubts? So this is the additional requirement that you are going to have a look at. This is the additional requirement that we will have to check. Are we clear with this? Yes? Sure, sure. I'll share this. Don't worry. Okay. I'll share the handwritten notes. Okay. Any doubts? Any doubts? Anybody so far? I'll give you this additional requirement also in writing. Don't worry. But as of now, this is what you are going to take from here. Is it fine? Yes. So first thing is 75% additional revenue. Okay. And that is why what I am going to do is, see, in the question, what they have given, segment C is a new business unit and is expected to make a significant contribution. Now we come back to our question. In our question, we are now going to factor in segment C. Okay, let us now factor in segment C. Okay, all this part is done. Okay. All right. So now let us factor in this. So total total percentage of external revenue reported by A and D is equal to how much? A is 30, D is 5 upon 50. So this is equal to 70%. This is equal to 70%. Now, is this sufficient? Answer is no. Is this sufficient? Answer is no. You need to report extra. Therefore, I will be adding C. Since C is expected to have higher contribution going forward, comma, it is added to the reportable yes, it is added to the reportable segments. Therefore, reported external revenue is now 30 plus 5 plus 8.5 divided by 50. So that comes to how much? 87%. Therefore, A, B, and C reportable Are we clear with this? Yes, sure. So until you meet the 75% of external customer criteria, you will go on adding the segments. You will go on adding the segments. Are we clear? Why divide by 58.5? Why divide by 58.5, Shruti? It is external revenue, na? So 30 plus 5 plus 8.5 divided by 50. It should not be divided by 58.5. Okay. The numerator is increasing, denominator is fixed. Okay. All right, fine. So that takes care of the first major condition. Revenue 10% internal, external together. If it is higher, report it. At the same time, you also check whether the total external revenues reported is at least 75%. If it is 75% out of the identified segments, go ahead. If not, keep on adding additional segments until you meet the required margin, the required proportion of 75% of only external revenue. Are we clear with this? Yes. Tanisha, Vanshika, Namrata. Yes. Are we guys okay? Boys, Yadu, Muhammad, uh, Viraj, Shailesh. Yes, all clear? Okay. Done? Yes, good. Okay, fine. Tanisha, did you follow it up? Yes. What about the other? Okay. So let us continue. Then we'll come back to our notes. Or if you have any space, you can write it here. Otherwise, you can write it after this question. Okay. You can write it after this question. Additional criteria for reportable segments. Additional criteria for reportable segments. Let us see where I have put that in this slide. It's there actually. All right, fine. This one you can just write here, refer slide 19. Okay. All the additional conditions are given there. Additional criteria for reportable segments. All the additional criteria are given there. Okay. Let us have a look now at the presentation. So that takes care of the first part, that is revenue. That takes care of the first part, that is revenue. Now the next one is basic quantitative thresholds. Revenue we saw. Okay. If this is not met, then whether absolute amount of reported profit or loss is 10% or more of the greater in absolute amount of combined reported profit that did not report a loss and combined reported loss of all segments that reported a loss. So too confusing. what all is written here. So we need something better. Okay. So एक काम करते हैं. Let us look at it with the help of a question. Okay. The question is going to make your life simple and mine also. Okay. So ABC Limited has 5 operating segments, namely ABCDE. The profit or loss of respective segments for the year ended March 31 is as follows. A, B, C, D, E, you are having those numbers. Based on the quantitative thresholds, which of the above segments A to E would be considered as reportable for the year ending 31st of March? Okay, fine. So therefore, this is which question? Question 4. Test your knowledge. So शुरू करें. A, B, C, D, E. 780, 1500, 2300, 4500, 6000. Okay. So the total of this is 1480. ठीक है. Now, if I just go by the words that 10% of reported profits is going to be your guideline. So if you go simply by that, 10% of the profit is 1480 into 10%. So that will be 148. And if I take this 148, then my reported segments are going to be only one. Sorry. Okay. Then basis that 1, 2, 3, you would only be having A, B, and E as your reportable segments. But tell me one thing, don't you think C and D are also equally important, if not more, as compared to A, B, and E? Yes, don't you think C and D are also important because they are also having substantial losses? In fact, those losses are the reasons why overall results have come down. So tell me, don't you think C and D is also important? Yes or no? If you are to analyze this, don't you think you want more information on C and D? Yes, you are going to need it. So what the standard has said, do one thing. Do one thing. Take absolute values. Take absolute values. Absolute values means the positive numbers. The positive numbers. So total profit is equal to only the profit items. Okay, so how much is it equal to? 780 plus 1500 plus 6000. 8280. On an absolute basis, ignore the sign. On an absolute basis, the total loss is 2300 plus 4500. So that becomes 6800. That becomes 6800. Now what the standard tells? Now what the standard tells is take higher of absolute profit or absolute loss. Please pay attention. Now this is a little technical. ज़्यादा नहीं है. You guys will crack it. Okay. Take the higher of absolute profit, absolute loss. Higher कौन सा है sir? 8280. 10% of that. 10% of 8,280 is equal to 8280 into 10%. So that is equal to 828. That is equal to 828. Are we clear with this? Yes. Are we clear? So now my benchmark is this 828. Anything that crosses 828 in absolute terms, absolute means don't look at the sign. Sign will always be deemed to be positive. But anything that is above this 828 will be regarded as what you call a reportable segment. So therefore, B, C, D, and E are reportable segments. Yes. Are we clear with this? Because with the B, C, D, and E, I'm also meeting the 10% criteria. I'm also reporting the 10% criteria. Vanshika, E also is reportable. Okay. Don't look at this with a negative sign. Don't look at 2,300 and 4,500 with a negative sign. They are positive because this is on the basis of absolute. This is on the basis of absolute. Are we clear with this? Yes. So B, C, D, and E, all the four are reported. Yes. Why not E? Why not E? Just take a look. A, B, C, D, E. What is the profit percentage? 780 by 8280. Here it is 1500 by 8280. Here it is 2300 by 8280. Here it is 4500 by 8280. And here it is 6000 by 8280. So this is equal to, what is my percentage? Yes. Okay. 9.4. Into 7. 54. 72%. So therefore, that comes to, these are the ones where it is exceeding 10%. And that is why these are the reportable segments. Are we clear with the profit criteria? Yes. यही एक confusing criteria है. This is the only confusing criteria. Remaining are all straightforward. Remaining are all straightforward. You don't have to worry about anything. Am I clear with this? Tanisha, did you follow? Viraj, did you follow? Manoj, Muhammad, Yadu, Geeta, did you follow? Who else? Shruti, did you follow? Kirti Salgaonkar, did you follow? Shailesh, Viraj, all clear? Yes. Okay. Yadu and Viraj have confirmed. Others, we took it as 600. I had taken it as 600. If I had taken it was wrong, it should be 6,000. Okay. Fine. Fine. Okay. Good. So this is the only complicated or slightly technical thing which is there. Okay, a twist, but remaining otherwise it's all fairly simple. So this question is done. Okay. So now this is done. Assets are 10% or more of combined. Whether management believes that segment information would be useful to users of IFRS, this is optional. Do not report separately about an operating segment if none of these conditions are satisfied. If even one is satisfied, then yes. Okay, so let us move on. Aggregation principle we saw, 75% principle we saw for the revenue. Continuity principle. Continuity principle says what? Previous year, there was a reported segment. Current year, it does not meet the criteria. Okay. Previous year, there was a segment that was reported. Current year, it did not meet the threshold and therefore it went into the same, what you can say, it went into the others criteria because it did not meet the 10% or 75% criteria that was laid down. Previous year it had. So what the standard tells you is if there is a segment which was reported in the previous year, current year is not reportable on account of it not meeting the threshold. Still, you will have to report it in the current year because you will have to facilitate the continuity. You will have to facilitate the continuity. Are we clear with this? Yes. Are we clear? Hmm? Sure. Any doubts? So, previous year reported. Current year not meeting the threshold. Still you report so that it ensures continuity. It ensures continuity. Are we clear? Yes. Are we clear? Yes. Continuity. Good. Okay. And finally, comparison. Suppose a new segment became reportable in the current year, you will have to restate previous year's figures to include that, unless it is not possible to do so or the cost to develop is very high. Are we clear with this? Yes. Are we clear? So, continuity principle. Continuity principle. Yes, 2021-22 reportable as per threshold. Current year as per threshold. Still, still regarded as reportable segment. Still regarded as reportable segment to facilitate continuity. But next year, if this is not reportable, don't include it. Next year, if this is not reportable, don't report it. Okay? Because 21-22, it was reportable. 22-23, it fell below threshold, but I have to facilitate the comparison. 23-24, it is still below. You will not take that 22-23, it was reportable. No. 22-23, it was reportable by virtue of continuity principle. 23-24 nothing happened on that. So 24-25 में कोई फर्क नहीं पड़ेगा because it is already a what you can say, it is already part of that continuity principle and it is out of the discussion. Is it okay? Yes. Yes. So this is the last year. Next year, if it is not reportable, it will not be reported. It will not be reported. Okay. Okay. Yes, Namrata, did you follow? Yes, and comparison is exact opposite of this. Current year I got new, so previous year you restate. Previous year you restate. Yes, done. Did you understand the other requirements? Okay, fine. Finally, there are some small conditions. 10 segments principle, generally restricted to 10 segments, otherwise your report goes too bulky. So that is one. Management discretion, even if it does not meet any criteria, management may want to keep one or two segments for their discretion at their choice. So those will be included. Residual category. Residual category. So all other items will go and be recorded in all other segments category separately from other reconciling items. Okay. So you go and park it. So that takes care of step 3. That is determining the reportable segments. Are we clear with this? Yes. Are we clear? Shall we proceed? This is our last question that we are going to take for the day. It should sort out all your queries and all the reporting, non-reporting segments जो भी है, this should be sorted out in this question. Question number 9. Mark it as important. Mark it as important. Okay. Tanisha left. Okay. Just go through question 9. Give me a minute. Okay. No, Vanshika, let us not jump to conclusions. The question is not so simple as it appears. Okay. When I said it is important, there has to be some twist. Without a twist, we cannot have this question. Okay. So let us start doing this question. It has come in your RTP. Okay. So first one is, let us start this question. Okay. Very important. Mark it as such. Okay. So this is May 22 RTP. Okay. So let us start. Segment revenue data is there. So let us note it down. Criteria 1. Segment revenue. 10% of internal plus external sales. Internal plus external sales. Okay. So let us start. A, B, C, D, E, F, G, H. E, F, G, H. Total sales. How much it is? Look at this. Okay. 100, 315, 45, 15, 15, 45, 15, 15, 50, 25, 35. 50, 25, 35. Okay. So this is your total sales. Next one. What is the total of this total sales? 100 plus 315 plus 45 plus 15 plus 15. How much does it come to? Percentage of total sales. How much does it come? 415 plus 45 plus 30 plus 50 plus 60, 600. So this is 16.7%, 52.5%, 7.5%, 2.5%, 2.5%, 8.3%, 4.17%, and this comes to 5.83%. So based on this, criteria met by which segments? It should be 10% or more. So A, B, that's it. 1, 2, 3, 4, 5, 6. All are below 10%. So therefore, the first one is A and B. The first one is A and B. Criteria 2. Criteria 2. 10% or more of segment result in absolute terms. In absolute terms. So I have A, B, C, D, E, F, G, H. Okay. Now, what is my profit? What is my loss? Profit 5, 15, 8, 5, 7. 5, 15, EGH 857. 857. Loss is 95 and 5. 95 and 5. So 90 plus 5 plus 5 comes to 100. 5 plus 15, 20. 25 plus 8, 33 plus 7, that comes to 40. So higher of profit or loss is how much? 100. So my evaluation will be based on taking 100 as the base number. Okay. So therefore, A, B, C, D, E, F, G, H. Percentage to segment loss. Percentage to segment loss. A is 5 upon 100, so that is 5%. B is 90%. C is 15%. D is 5%. E is 8%. F is 5%. 5% and 7%. So what is my reportable segment here? Met by A is not meeting, B is more than 10%, so B. C is also more than 10%, so C. And then D to H are all below 10%, so they are not meeting. So A and B first criteria, B and C second criteria, and criteria 3. Segment assets. 10% or more of segment assets. A, B, C, D, E, F, G, H. Assets and percentage of assets. 15, 47, 5, 11. 15, 47, 5, 11. 3, 5, 5, 9. 3, 5, 5, 9. Okay. So 15, 47, 5, 11, 100. So great. 15%, 47%, 5%, 11%, 3, 5, 5, and 9. Criteria met by A more than 10, B more than 10, D more than 10. Yes? Are we together, everyone, or am I too fast for you? Have I understood? Yes, Geeta, did you follow? Shruti, did you follow? Okay, fine. All right. Okay, good. Namrata, did you follow? Muhammad has confirmed. Yes. Okay. Yes. So now, therefore, total segments reportable under above criteria is equal to A, B, C, D. Are we clear? Yes, because see, here A and B are meeting the turnover criteria, तो लेना पड़ेगा. Yes, B and C are meeting the profit criteria. We have to consider. A, B, and D are meeting the asset criteria. We have to consider. So therefore, cumulatively, what assets are meeting one of the criteria? It is A, B, C, or D. It is A, B, C, or D. These are meeting at least one of the criteria. The condition, the threshold condition, please be alert. This threshold condition which is there, it should be any one. See, these conditions these conditions are or, or, okay. These are all or conditions, okay, and these are all and conditions. This or had to be here, this has to be and. You should meet none of these conditions for it to be not a. Wait. Sorry. Earlier only was correct. Okay. Yeah. Is this condition met? Or is this condition met? Or is this condition met? So this is how it should be. If this condition is not met, and this is also not met, and this is also not met, and you believe that there is no further reportable segment, then you do not report separately. So what is important is you have to meet at least one of this criteria. And therefore, A, B, C, and D are meeting at least one criteria. But is it done? Is your answer complete with this? With A, B, C, and D, will you just finish the answer and say that, sir, everything is done and we have reported everything? Or will you do anything extra? Will you do anything extra or is it done with this? Yes? Bolo? Is your job done? Question is over. A, B, C, and D reported segments finished. Chalo. Bye bye. Is it done? Or do you have to check for something else? Yes. 75% criteria has to be checked. Remember, I told you, even if you have reported numbers, reportable segments, the turnover of that is less than 75%. You have to go on adding additional segments until you meet 75% criteria. So you have additional reporting, additional thresholds. One is 75% external revenue. The other is continuity principle. If it was reported in the previous year, it should be reported in the current year. Third one is a comparison principle, but that won't affect you. Comparable principle is what? Comparable principle is if I have a new segment in current year, previous year, I will have to restate the numbers. But that won't affect you right now. It will affect you in the practical life. In examination, it's very unlikely they will give you report previous year. They will say report the current year. Okay. So we are now going to check the 75% criteria. So now test for 75% external revenue criteria. This is only external revenue, not internal plus external. Okay. So revenue of A, B, C, D. Which revenue? External revenue is equal to 255, 15, and 10. 255, 15 and 10 divided by external sales comes to how much? 405. So that comes to how much? 280 divided by 405, 69.14. So now you cannot say that only A, B, C, and D are reportable. You will have to report something extra. So 405 into 0.75, you should report at least 303.75, out of which you have reported 280. So another 23.75 you have to look at. Where am I meeting 23.75? I can report either F or either G. I'll go with F. Okay, I'll go with F. Okay, क्योंकि वो पहले है. If you go with G also, there is nothing wrong. Okay, but I'll go with F because it is material to a greater extent. It is more material as compared to G. So therefore, including F above, percentage of external sales is equal to 255 plus 15 plus 10 plus 50 divided by 405. So that comes to 330 by 405. 81.48. Did I meet the condition? Yes. Therefore, what are your reportable segments? A, B, C, D, and F. Therefore, yes, A, B, C, D, and F. Are we clear? Did you get a hang of the quantitative thresholds? Yes. Did you get a hang of the quantitative thresholds? Yes. See, I added F also here. Did you understand this part, Geeta? This part you understood? This is below 75%. So I will have to include further segments to ensure that I touch that 75% threshold. I touch that 75% threshold. So now I'm adding F. Okay. I have already had A, B, C, and D. So now I will add F to that. So now what is my total external sales? 255 plus 15 plus 10 plus 50 divided by 405. So now it is coming to 81%, which is more than 75%. So now I met all the quantitative requirement. I identified reportable segments based on 10% of revenue. I identified the segments based on 10% of the segment result. I identified segments based on 10% of total assets, and I have now identified the 75% external revenue criteria also being met. Now, these are the four criteria, and on these four criteria, the segments to be reported are A, B, C, D, and including F. So therefore, my reportable segments are A, B, C, D, and F. So you will report the data relating to A, B, C, D, and F. Right now, we are only discussing what should be reportable segments. In those segments, what should be reported? वहां तक हम पहुंचे नहीं अभी तक. That is step number 4. That is step number 4. Are we clear with this? Yes, Geeta, did you follow? मनोज, मोहम्मद, सब ठीक है? Yadu, all fine? Shailesh, understood, Geeta? Great, great. Okay. So now reporting is this one. Reportable segments are 5 of them. So that is done. That takes care of this question. Same lines. Please try this question. I will tell you. ये देखो. These numbers are exactly double of this. बस वही फर्क है और कुछ भी नहीं है. 100, 315, 45, 15, 15, 50, 25, 25. यहाँ पे देखो, it is 200, 630, 90, 30, 30, 100, 50, 70. That's it. So I want you to try this question by yourself. Okay. Additionally, what they have given is in the previous year, A, B, C, and E were the reported segments. So when you touch the 25, when you are analyzing the 75% criteria, मन मर्जी नहीं ले सकते आप. You cannot take anything out of your whims and fancy. You have to ensure that at least one of these you will have to take to meet the 75% criteria. Are you able to follow? देखो यहाँ पे हमने क्या किया? We just took F. We just took F because no other information was given. But in this question, they have told that in the previous year, A, B, C, and E were already reported. So now you will have to consider one of these segments if you are not meeting the 75% criteria. If you are meeting the 75% criteria, even then you have to ensure one of these, means all of these are there in that reportable segment. If not, include these segments there because it will facilitate comparison. It will facilitate comparison. Are we clear with this? Yes. Can you try this part for me, please? Question 6 try करो. हो जाएगा आपसे. Okay. So I have done some questions. Yeah, good. Not bad. Okay. 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 Can you try that? कुछ खास है नहीं. It is the same thing. Only thing, this continuity principle they have just added that. Okay. ये जो continuity principle था ना, this one they have just told these were the reported segments last time. So please include this. बस उतना ही extra है. बाकी तो सब same है. Remaining everything is the same. So now step number 4, making the disclosures. Step number 4, making the disclosures. So now what all you will disclose is general information, what judgments you applied, what are the products, services, factors used to identify, etc., etc. Segment profit, loss, assets, liabilities. This is important. Measurement basis. Okay. Measurement basis में what happens is, see, the chief operating decision maker would be analyzing the results in a particular manner. It may or may not conform to accounting policies. It may or may not be suitable to accounting policies. Just to give you an example, see, what they would probably do is, in the segment reporting, they would be probably valuing inventory on last in, first out basis. They would probably be valuing inventory on last in, first out basis. But we all know that Ind AS 2 does not permit last in, first out. Ind AS 2 does only FIFO or weighted average. So we will have to consider the valuations on FIFO or weighted average, and that would be in the financial statements. But the chief operating decision maker would be considering it on the basis of what you can say, chief would be taking it on the basis of LIFO. So when you are doing your segment reporting, stick to what the chief operating decision maker does. Stick to what the chief operating decision maker does. Look at this. Segment results, assets and liabilities are to be reported at measures used by the chief operating decision maker. They may be different from accounting policies. They may be different from accounting standards. They may not even be in conformity with accounting standards. Doesn't matter. You stick to what the CODM does. And then you will do a reconciliation with entities figures. You will do the reconciliation with entities figures. Okay. Because we are presenting the management perspective in the segment reporting. And when we are presenting the management perspective, I cannot color it with accurate treatment under accounting standard. If the CODM is following LIFO, कुछ तो वजह होगा वो LIFO follow कर रहा है. So we will have to present that to the in the segment reporting, tell that LIFO is done, and then give a reconciliation to the accounting numbers. Give a reconciliation to the accounting numbers. Finally, present a reconciliation of revenue, profit, assets, liabilities, and give any material information. Okay, ये तो normal है. You will have to give this. Yes. All right. If you have provided to CODM revenue from external customers, interest, depreciation, interest in associates, JV, non-cash items, only if it is given. Inter-segment transaction, you disclose geographical areas, major customers, you will have to disclose. Okay. So that's it. That completes the revenue, the reporting requirements. What are you going to exclude? You are going to exclude gain on sale of investments, interest and dividend income, deferred tax income. You will exclude loss on sale, interest expenses, allocation of head office expenses, tax expenses. Exclude investments, head office and tax assets, and provision for tax and head office liability. Because these are not allocable to a particular segment. They are allocable to the entity as a whole, and therefore they will be excluded and not disclosed. They will be excluded and not disclosed. Okay. All right. And then restatement of previously reported information. Just go through this. It is theory. So if you have to disclose, you disclose. If the cost to develop would be expensive, then you will need not have to disclose. So changes the structure of its organization, which results in a change in the reportable segments. Then the corresponding information for current, previous, interim, everything should be restated unless it is not available and the cost to develop it would be excessive. So this is what you will have to make it. Okay. So that takes care of your standard. I want you to pick up this question to see how the reporting has been done. Okay. Question number 2, test your knowledge. Go through this question. You will understand what is reported, how it is reported. Okay. It's just a format question. All the data is there. You are just putting it in the format. That's it. You are not doing any rocket science. So that is why I am not going to discuss this question practically in class. It's just a disclosure question, nothing else. Okay. So that takes care of the standard. So just to conclude, we have done 108 today. So the 108 standard will essentially discusses about operating segments. It is a 4-step model. The first step is identifying the chief operating decision maker. It is a function. It is not related to a particular individual or a designation. It could be, it is the body that carries out 2 important functions. The first function being allocation of resources. The second function being assessment of performance. So both of them are performed on which segments? That is important. So that is why we have to identify the CODM. The next step is identifying the operating segments. So they should have revenues, basically that is the requirement, but it is an exception also. And apart from that, you are having to answer whether the results are reviewed regularly by the CODM, and whether separate financial information is available. Okay, so these are the 2-3 things which you will check. Then they become reportable segments. So we start with the entity, we narrow down to operating segments. The operating segments will further be narrowed down to reporting segments on the basis of aggregation criteria, followed by quantitative threshold. The quantitative threshold requires 10% of segment revenues, 10% of segment assets, 10% of absolute profit or loss, depending on whichever is higher. Okay, so whatever is higher, at least that much you will have to meet the 10%. And then after aggregating everything, you have further 3 quantitative thresholds. First one, all the segments together should report at least 75% of external revenue. If anything is reported in the previous period, you will report it in the current period also. And if anything is reported in the current period, you will report it in the previous period also. This is the continuity and the comparison principles that are there. Okay. Apart from this, anything that the management may wish to include, you will include it as a segment and report the numbers. Okay. So that takes care of the quantitative thresholds. Then when you are doing your disclosures, you will disclose segment revenue, segment assets, segment results, and then after that you will later on reconcile it with your balance sheet and profit and loss numbers. You will use the same accounting policies which are used by the CODM for the purpose of business reporting, for the purpose of segment reporting. If the policies are different from what is done in financial statements, you will present a reconciliation of that. So with that, everything is done. So my sincere request, I have left the questions which are theory, number one, and only the last disclosure question where all the data is given, you just need to plot it. So my request today only, before today's match starts, okay, before today's match starts, please ensure that you complete that and then you are free to enjoy today's match and have a pleasant evening. Okay. So thank you very much. Thank you, Shruti. Thank you, Namrata. Thank you, Geeta. Thanks, everyone. Thanks, Yadu, Manoj, Mohammed. Thank you. The presentation is already uploaded. You don't have to worry. I have been requested to upload this क्या बोलते हैं इसको, this presentation. So it's presentation name, the handwritten notes which I make in the class. So I'll share that to you. Okay. I'll share that to you. Anybody has any doubts, any difficulties, or anything else? Yes? Anything else you would like to discuss? Anything else you would like to clarify? Anything else you would like to criticize? Or anything else you would like to shout at me? Yes? Please tell me. Yeah, I'm just keeping the mood a little too much of discussion, right? So let me know. Anything is there that's troubling you? Nothing. Everybody is happy, signed off, done. Okay, no doubts. वो करेंगे. I'll speak to the institute. Okay, I'll discuss that. Don't worry. Okay, I will discuss it and we'll have a session on 115. पहले let us get done with all the topics because वो भी ज़्यादा important है and then we can pick this up later. Okay? Yes. Thanks everyone. Thank you. Anything else? It's a pleasure to have nice students like you, Yadu. Okay? You guys are interactive. You make my job very easy. Okay? Thank you. Chalo, bye-bye. Take care. Have a nice Sunday, everyone. Okay. Thank you. And see you in December. In December, we have lots of classes. Okay. Together. There are quite a number of small standards which we will be doing. Okay. Chalo. Bye-bye. Take care. Okay. Bye-bye. The session is done.